Joining us for today's webinar, Pursuing Quality in the Prepaid Industry, Navigating New Frontiers with the Compass Principles. I'm Beth Brockland, the Director of the Compass Principles Initiative at CFSI. We are really very pleased to be welcoming all of you here today. We hope you will walk away from today's webinar with the following. First, an understanding of the current level of quality and where there are opportunities for further high-quality innovation in the prepaid industry. Second, insights from two industry leaders who have effectively used the Compass Principles to enhance customer and business outcomes. Third, familiarity with the tools that are available to help put the Compass Principles into practice to improve the design and delivery of prepaid offerings. Here is our agenda for today. First, I'll give a very brief overview of the Compass Principles and the work CFSI has done to apply the framework to the prepaid industry to date. Then I will turn it over to my colleague, CFSI Research Analyst Thea Garon, to present some highlights from CFSI's newest report, the Prepaid Industry Scorecard, which assesses the current level of quality in the prepaid industry. Next, I will unveil a brand new publication that CFSI just released, a Compass advisory note entitling Pursuing Quality Innovation in the Prepaid Card Industry, aptly. And next, the Compass advisory note presents case studies of two companies, Banking Up and NetSpend, that use the Compass Principles to enhance the product design and delivery. I'm so pleased to welcome Patrice Peyret, the CEO and co-founder of Banking Up, and Lisa Henken Ramirez, the Vice President for Customer Experience at NetSpend, here with us today. I will lead us through a discussion during which they will share with you some of the outcomes and the lessons learned from their initiatives. And finally, we will reserve some time for Q&A from all of you. First, some very brief background about the Compass Principles for those of you who may be new to CFSI. The Compass Principles are aspirational guidelines for the U.S. financial services industry. Developed by CFSI in 2012, they affirm standards of excellence in the design and delivery of basic tools that people use to manage their everyday financial lives. The four Compass Principles are embrace inclusion, build trust, promote success, and create opportunity. There are 6 core values that underlie the Compass Principles. I want to highlight 2 in particular. The first is the firm belief that financial services offerings must be profitable and scalable from a business standpoint in order to offer customers lasting, high-quality solutions. The second is an acknowledgement that the customer's needs vary, and therefore there's value in variation and choice in the marketplace. We are very grateful to the Ford Foundation, the Omidyar Network, and the Annie Casey Foundation for their support for this initiative. Also in 2012, CFSI published the Compass Guide to Prepaid. The Compass Guide to Prepaid defines operational practices for prepaid card providers using the Compass Principles as a foundation, provides recommendations for the design and delivery of high-quality prepaid products. And with the guide, CFSI seeks to drive innovation in the prepaid card industry by providing a clear roadmap for what a high-quality product looks like. Now I'm going to turn it over to Thea to walk us through the highlights of our newest research. And again, just a reminder, if you have questions at any point during Thea's presentation, please just submit them via the question box to the right of your screen, and we'll answer as many as we can when we get to the Q&A portion.
Thank you, Beth. As many of you know, the prepaid card industry has evolved remarkably in the last few years, and at CFSI, we've watched these developments with great enthusiasm. We've watched as prepaid cards have grown from basic transactional products into sophisticated financial management tools that meet the needs of a diverse subset of consumers. As the market has matured, the quality of prepaid cards have increased dramatically. Prices have come down, fees and account information have become clearer and easier to understand, and consumer protections have become ubiquitous across the industry. However, we felt that at this point in the prepaid card industry's development, it was important to take stock of the current level of quality of prepaid cards and to develop a set of benchmarks to spur further growth and innovation in the industry. The assessment that we just published, the Prepaid Industry Scorecard, does just that. By using the definitions of quality articulated in the Compass Guide to Prepaid, it measures the degree to which prepaid card providers have adopted practices that can actively contribute to improving consumers' financial lives. The objectives of the report are twofold. The first is to measure the current level of quality in the prepaid card marketplace, and the second is to establish a set of benchmarks to measure future industry progress. And this report was made possible by the generous support of the Annie E. Casey Foundation. And the scorecard assesses the prepaid card industry by looking at 18 prepaid cards that collectively represent approximately 90% of the prepaid card marketplace. These 18 cards are cards that are issued by the largest program managers in the marketplace, as well as a handful of smaller program managers that have particularly innovative cards. And you can see the chart to the right lists the 18 cards featured in the report. CFSI researchers collected data on these cards from a variety of sources, including cards' websites and online terms and conditions, field research, which included calling customer service centers, and examining card packaging in stores and at bank branches. And then finally, by conducting one-on-one phone calls, which each of the 18 providers featured in the report, and actually 15 of the 18 providers were reached and provided comment for this report. We then aggregated this data and assessed it against the recommendations outlined in the Compass Guide to Prepaid, using both quantitative and qualitative methods of analysis to derive scores for the industry. Quantitatively, we considered both the number of cards as well as the share of the prepaid card market that we sampled that had adopted a certain recommendation. Qualitatively, we considered the relative weights of certain recommendations, the current regulatory environment, and the feasibility of recommendations from a business perspective. And I'm not going to spend any more time on this call going into the methodology that we use to calculate industry scores, but if that's a conversation that you're interested in having with me, I'm happy to have it with you offline. However, the last point that I do want to make about the methodology used in this scorecard is about the industry scores themselves. We chose to score the prepaid card industry as a whole rather than to score individual providers in acknowledgement of the fact that no one single prepaid card program can meet all of the recommendations listed in the guide. Companies have adopted different strategies to meet the needs of consumers. Some prepaid card providers offer basic cards at a very low cost to consumers, while others offer more sophisticated cards at a potentially higher cost to consumers. And we really believe that there's value to consumers in both of these approaches. However, we also believe that the industry as a whole should offer an array of products ranging from those basic cards to the more sophisticated multifunctional cards. And in this webinar, we'll mostly be focusing on that latter category of cards, the more sophisticated multifunctional cards. Before we get to the actual industry scores, and we're getting close, I promise, I'd like to show you how the Compass Guide to Prepaid is structured so that you'll understand how we score the industry. The guide presents recommendations across 6 product dimensions. These product dimensions include categories like product functionality and marketing and communications. And you'll see the rest of the product dimensions throughout the remainder of the presentation. Under each of the product dimensions are practices. These practices include categories such as load, pay, and withdrawing funds. And then beneath each of these practices are specific examples. So under the practice of load, for instance, an example would be that consumers have the ability to directly deposit funds onto their card. And it's important to note that the individual data points that I'll be presenting throughout the remainder of the presentation are the actual examples listed in the Compass Guide to Prepaid, and I'll be sure to highlight those once we get to them. Then finally, at the highest level, each of the recommendations listed under the practices are also categorized as core, stretch, or next generation recommendations, which are essentially different levels of recommendations. So core practices refer to the standards for a high-quality prepaid account, basically the minimum requirements for a prepaid account to be considered high quality. Stretch practices refer to best practices for providers looking to stretch beyond the basics and do a little something more with their cards. And next generation practices refer to additional services that have the potential to actively improve consumers' lives. And you can see how these all fit together on the summary scorecard that I'm about to show you, which reflects the actual grade that we awarded to the industry in the recently released Prepaid Industry Scorecard. Here are the scores that the industry received across the 6 product dimensions listed in the Compass Guide to Prepaid. And I'll be going into each of these in more detail throughout the remainder of the presentation. Here are the scores that the industry received for the 23 practices listed in the guide. And you'll notice that these scores are colored in green, orange, or purple. This color coding represents the categorization of these recommendations as either core, stretch, or next generation practices. And you can see there are a lot of grades up here, and there are too many for us to go through one by one in this presentation. So I'll mostly be focusing on the stretch and next generation grades, or the areas where we've identified there are the most opportunities for innovation. And just so we're on the same page, in each of the following slides, you can expect to see me begin by walking you through an explanation of the product dimension grade, then zooming in on one practice grade, and then finally walking you through the examples listed under each of the practices. So the first product dimension is product functionality. And the prepaid card industry received an A- for this dimension because prepaid cards mostly meet the basic transactional needs of underserved consumers by providing deposit insurance and by allowing cardholders to load, pay, and withdraw funds conveniently. However, there remains an opportunity for providers to offer increased value to consumers through expanded features, including surcharge-free networks of ATMs, rewards and loyalty programs that benefit the consumer, as well as companion cards tied to a cardholder's primary account or linked to sub-accounts. And a sub-account is actually a separate account from the cardholder's primary account. And as you can see, fewer than half of the cards that we looked at offered some type of a companion card. However, a companion card, especially when linked to a sub-account, is incredibly useful for budgeting and money management purposes. For instance, a cardholder can give that secondary card to their child or to another family member, and that secondary cardholder can only spend the money that's been allocated to that sub-account. Before moving on, I do want to just remind you that the grades on the left-hand side of the screen are coded in green and orange because the green grades are the core grades and the orange grades refer to stretch grades. And later on in the presentation, you'll see the purple grades that are the next generation grades. For the recommendations around marketing and communications in the Compass Guide to Prepaid, the prepaid card industry receives a B+. The fees and account information associated with prepaid cards are generally presented in a straightforward and digestible manner. However, we did find that there are opportunities to better promote positive consumer usage. Most of the cards we looked at provide cardholders with some sort of tips or guidance, either on the card's website or through ongoing written or email mass communications. However, this information is often generic and sent out to all consumers or to large segments of consumers. Only 25% of cards, 2 cards of the 18 that we actually looked at, provide proactive and individualized guidance to cardholders to help them better use their card. So this type of proactive and individual guidance could include sending cardholders a text message when they used an out-of-network ATM, but they could have used an in-network ATM and not paid any fees. Or it could include contacting cardholders who could be saving money by being on a different fee plan and encouraging them to revisit the fee plan that they're on and potentially switch to another one to save money. For customer service and account information, the industry received a B+, a B. Cardholders can conveniently access important account information and receive straightforward customer service assistance in multiple languages. Fraud and error resolution policies protect cardholders' money in the case of a lost or stolen card. And consumers can generally request paper statements. One-off statements are common, though ongoing statements are less frequently available. In terms of alerts, all cards allow customers to register for text or email alerts to receive balance updates or account information. But there remains an opportunity for programs to provide a more robust set of alerts with customizable settings. And customizable settings are so important because they allow cardholders to decide what information they'd like to receive and how and when they'd like to receive it. For pricing design, the industry received a B+. The prepaid cards we looked at were generally priced in a fair and straightforward manner that promotes positive consumer use. And fee structures generally build a supportive relationship between customers and providers. For instance, most cards offer free customer service for consumers calling to resolve an issue. However, penalty fees on cards remain high. About half of the cards we looked at had monthly inactivity fees or ATM decline fees. About 2/3 of the cards we looked at had card replacement fees, and about 1/3 of the cards charged consumers a fee to retrieve funds upon closing an account, which essentially penalizes customers for closing that account. The industry received an A- for recommendations around distribution and acquisition. Prepaid cards are relatively accessible and can be purchased conveniently at retail outlets, bank branches, financial institutions, and online or over their phone. Card enrollment procedures generally make it easy for consumers to get a card. Most cards don't require a credit check to open, and most provide assistance to prospective customers when their information isn't initially accepted for verification purposes. However, enrollment procedures are not fully supportive of cardholders who don't have a Social Security number. And clearly, there are a number of regulatory hurdles for prepaid card program managers that they face when accepting foreign IDs as valid verification to open an account. But you can see that about half of the providers have figured out a way to do this, and we'd like to see more innovation in this area to support all consumers, even those who don't have a Social Security number. And finally, the prepaid card industry receives a C- for additional services. As you can see, the purple indicates that these additional services are all next generation practices. So practices for providers looking to offer a more robust set of services. While cards have started to offer advanced services like budgeting tools, savings platforms, and access to high quality credit, we'd like to see more innovation here to enable cards to serve as sophisticated money management tools. With regard to credit, however, providers must proceed with extreme caution and only offer forms of safe, affordable, and high quality credit, and make sure that this credit is separate from the regular funds that cardholders load onto their prepaid card. And as a side note, to learn more about CFSI's definition of high quality credit, please reference our recently released Compass Guide to Small Dollar Credit, which is available on our website. Finally, while this isn't possible today for a host of regulatory and practical reasons, eventually reporting cardholders' payment data and reviewing cardholders' transactional histories may allow prepaid cards to serve as the basis for allowing consumers to acquire other beneficial financial products. Clearly, the prepaid card market has come a long way in the last few years. Today, prepaid card providers have largely embraced the recommendations identified as core practices in the Compass Guide to Prepaid. But there remains an opportunity for prepaid card providers to go beyond these basic practices by adopting the stretch and next generation practices articulated in the guide. And in this presentation, we mostly focus on the benefits that these practices bring to consumers. But I think it's also important to note that stretch and next generation recommendations can also be incredibly beneficial to the prepaid card providers themselves, because they have the potential to extend the longevity of prepaid cards and to increase consumer usage of these prepaid cards. So to conclude, we hope that the Compass Principles framework, which includes the Compass Guide to Prepaid, as well as the other tools that Beth will share with you, can provide prepaid card providers with a roadmap for how to improve their products in a way that is both beneficial to providers and to consumers alike.
Thanks, Thea. That's a great lead-in to our discussion. But before I welcome our speakers, I'd like to introduce a new publication that CFSI released just yesterday to coincide with this webinar. The publication is called Pursuing Quality Innovation in the Prepaid Card Industry. And this is the first in this new series of publications for CFSI called Compass Advisory Notes. The Compass Advisory Notes provide advice and case study examples from real companies to help financial services providers put the Compass principles into action. This first advisory note draws on the experiences of NetSpend and Banking Up, each of whom made internal commitments to use the Compass Guide to Prepaid as a tool to enhance their customers and their own business outcomes. I'm so excited to welcome Patrice Peyret and Lisa Henken Ramirez here today. Patrice is the CEO and co-founder of Banking Up, and Lisa is the Vice President for Customer Experience at NetSpend. Both have graciously offered to share with us some outcomes and lessons from their initiatives. Thank you both for being here with us today.
Thank you.
So first, I want to ask a question of both of you, but actually before I do, I want to pause and just remind everyone who's listening to please, as we're discussing, I'm going to get started with a few questions, but please feel free to add your questions using the question box on the right of your screen, and we'll open it up to Q&A shortly. So first, both of you were personally involved in the advisory council that developed the Compass Guide to Prepaid back in 2012. How do you think your company's involvement in that process caused you to think differently about your priorities with regard to product innovation? And Lisa, why don't we start with you?
Sure. Well, I think the great thing about the advisory council and really the principles were that in many ways they reinforced the way that NetSpend was already operating in a few kind of key areas. So one of the things that we've always focused on is a long-term relationship with our customers, and so the principle that really resonated with us the most, especially throughout when the advisory council was developing the principles, was really build trust. And so we saw a great opportunity to take what was that principle, developing mutually beneficial products that deliver clear and consistent value. That felt very much like what we did internally, and so it very much helped us, or the participation on the council also helped us think about how we could make something that we believed in internally also an external expression. And so really helped us think about how do we organize our thoughts around product in a way that shows that is important to NetSpend. So I think it was really helping us crystallize that in a meaningful way. And so we really enjoyed the participation in the advisory council and the ability to participate in and work with all of the different players. That was probably the part that was the most helpful, was hearing the different perspectives as a part of that effort.
And can you say a little bit more about the specific initiatives that you internally, decided to pursue?
Yes, absolutely. And I should back up. NetSpend is obviously we're a prepaid provider. We offer general purpose reloadable and pay cards through a variety of channels, through a direct model, through partnerships. And so the commitment that we made after serving on the advisory council was to increase the amount of value, specifically through money back to cardholders, that our average customer would receive by 5%. Because the reason we chose that is because we really felt like it aligned customer value, shareholder value, employee values, as well as we felt like there was a great opportunity for our partners to participate in that, in the value there as well.
Great, and I hope we'll have an opportunity to dive in a little bit deeper about the various ways in which you went about achieving that 5% goal. But that's a great start.
Great.
And so, Patrice, how did your involvement in the process of developing the Compass Guide to Prepaid and thinking about what a high-quality prepaid product looks like shift your thinking or influence your thinking with regard to product innovation?
Sure. So Banking Up is a 7-year-old company. We do prepaid products for both the youth and the underbanked market, but we are much, much smaller than our friends at NetSpend. And so we've decided that we would differentiate in the marketplace based on products and features and technology and rapid innovation, because we cannot gain consumer trust from our size or our brand recognition. So we've tried to put trust in the product quality itself. And as we've been focusing on rapid innovation using, the kind of technologies that those of you who use Google Mail or Google Maps are familiar with, where, what you see on your screen can be very dynamic and change from one day to the next, we've been using a little bit of a shotgun approach to innovation. And our participation in the Advisory Council has been very valuable because it's been helping us prioritize things. It's given us a much better insight on what was really important for customers. And I guess being one of the smallest participants in the Advisory Council, we probably have benefited disproportionately to our size because we've learned a lot from other participants. But really, we've been able to prioritize things. We had developments ongoing around mobile, around customer acquisition, around customer support, around self-help. And by looking at those developments under the light of the 4 guiding principles, the 4 cardinal points of the compass, has helped us put some priority as opposed to randomly trying things. So it's been very helpful for us in that respect. Again, given our size and the way we're trying to differentiate.
And maybe, Patrice, just to ask you a follow-up question, maybe you could tell us a little bit more about some of those initiatives. You mentioned mobile, you mentioned customer acquisition, you mentioned self-help. If you could, give the listeners a little bit of a flavor for some of the things that you're talking about.
Sure. So, for example, at the time of the Advisory Council, we were preparing a new mobile app. We had been doing mobile web access, and this is the time, 2 or 3 years ago when there was a larger proportion of people using smartphones. So one of the very basic things that we did when we participated in the council, and there was the production of a suggested fee box format for disclosing the fees, we realized that most mobile apps, actually no mobile apps that we were aware of, did a very good job of displaying what the fees were. They were just counting on people looking at them on the web from a PC. So we decided to build a mobile version of the fee box that you would access with a single click on a little icon on the app, saying, hey, here's a way to be transparent with the fees, and we are displaying a fee box according to one of the formats that the CFSI had put together right inside the mobile app. We were in the process of reconfiguring our live customer support service, so we sort of accelerated that to increase trust, and it consisted mostly in repatriating our customer service from offshore to onshore. We were trying to optimize our online customer acquisition, for being able to include more people more easily. So we switched to a new vendor of a customer identification process so that we could automate, for example, the verification of someone who does not have exactly a social security number or whose data is not exactly quite right, and avoid the pain of asking people to scan and mail, fax, documents to prove their identity, and try to streamline this as they are still on the website or on the mobile app trying to register. So these are, concrete examples of things that we put at the front of the queue of our development process as we were participating in the effort.
That's great. Thanks, Patrice. Again, to our listeners, if you have any questions as we go along, please feel free to send them in. I'd love to spend a minute now with each of you focusing a bit on the process, both in terms of getting internal buy-in to take the actions that you're describing, and in terms of tracking and measuring success over time. Lisa, I'll start again with you. At NetSpend, it sounds as though having the specific goals, the 5% increasing the value and the money back by 5%. It was really important in aligning everyone in the company, and it seems like it was an important component of the success of your initiative. Maybe now is a good time to say a little bit more about what some of the specific initiatives were, and can you say a little bit more about why that 5% goal was so important?
Sure, absolutely. So one of the things that I want to mention from a process standpoint is that we actually built the 5% and the achieving the Compass commitment into our strategic plan, and then reported out on it in our monthly customer experience readouts that go to the entire company. So that was one way that we sort of tracked and kept ourselves accountable to the goal. In terms of it really was why we picked it and what we did. Really, it was a way to galvanize employees around the idea of creating value for our cardholders. We've never to Patrice's point on strategy, we've never chosen the low cost route. We've always looked to provide a really quality product that delivers value back to our cardholders. And so it's a huge part of our strategy. And so when we looked at the things that we were going to do over 2013, we specifically focused on those things that would deliver value back to the cardholder for something that was also beneficial to the company. So specifically, we had a lot of incentives around direct deposit enrollment, because we know that direct deposit drives lifetime value. It drives engagement for the cardholder. It also drives benefits. So a cardholder is saving on check cashing fees. They're saving time. They're getting paid early. And so incenting them to do something that is beneficial for NetSpend, but also beneficial for them, was really sort of this win-win-win that we were looking for. Additionally, we launched a product called Mobile Refill, which paid customers back for refilling, using their card to refill their mobile phone, a prepaid phone. And so we really saw that as an opportunity for us to continue to drive value for the cardholder, and so we incented them for that. A couple of the other ones were incentives for cardholders to do things that those were on the sort of revenue side. On the expense side, we also incented cardholders to do things that would result in a reduced expense while still creating value for them. So one of those is incenting customers to activate their card via our website, which engages them on the web, which has very rich budgeting and personal finance tools, and again extends the life of that cardholder. So by incenting cardholders to activate online, we were able to not only increase our online engagement, give money back to our cardholders, but then also reduce some of the expense that we see in the call center from a live activation. So we really tried to focus on activities that would drive value in multiple ways, because we really feel that mutually beneficial, the part of the Compass principles around that was the most powerful for us.
Great, thanks for that overview. Maybe a follow-up question, Lisa, to probe a little bit deeper. How have you measured progress and created accountability throughout the organization for meeting some of the goals that you just described?
Right. So as I said, we specifically put it in our strategic plan. So and what we do, the way that our strategic planning process works is that we quarterly meet with our extended leadership team and review the results. And so that is our accountability measure, because we're all measured against that strategic plan. And additionally, we communicated out, we work with all the product managers that have direct responsibility for some of these product lines, as well as the account managers that are responsible for the lines of business, to make sure that that everyone was focused on the goal And that really is that goal. I think the important part there is that, we don't want our product to be viewed as a transactional product. We really view it as a full service product, and so reinforcing that strategy in the way that we sell, the way that we market, as well as the way that we service the product has actually taken, there's accountability in really every area of the business, but our ultimate accountability was really through that strategic planning process.
And Patrice, going back to my initial question around the process and the process for getting internal buy-in, Banking Up is a relatively small, nimble company, as you've just described. So presumably getting buy-in for you was not your main challenge. What does that process look like for you, and how have you measured your success in the last 2 years?
Indeed, I think the benefit of being small is that it's easy to get consensus among the handful of people. So we didn't really set up any particular formal process for getting buy-in into the company. I guess we picked two of the main points in the Compass principles. One was trust, building trust. Because of the size of the company we are, it was more important for us to build trust than other things, and then inclusion, so that we could sort of open up our funnel a little bit more, so that we could acquire more customers. At the time when we participated in the advisory council, we had already added quite a number of bells and whistles to our product. We had check writing services, we had mobile top-ups, we had savings, we had loyalty programs, we had connections to budgeting tools. So we focused on trust and inclusion. Trust was important, but very difficult to measure. I don't think that anybody would be able to frankly measure if the display of a very clear fee box on your website or your mobile app is going to change your bottom line numbers. It would require doing an A/B comparison to do this. So there's a sort of a sense that it's always good to increase trust, but exactly measure by how much you do this. Some of the other things are a bit more easy. On the inclusion part, what we did to automate the handling of the customer identification process to avoid asking people to scan, mail, and fax additional, paper information to us. That's easily measurable, because you can count how many false negatives, meaning people you would have rejected because they would not have been able to give you the information needed, or they would have been discouraged. How many of these people are you sort of rescuing from the customer identification process? And I looked recently at our numbers, and about 20 to 25% of the applicants today, and we've put this in place now for a year and a half, are being rescued, in terms of being accepted, even though something is missing or is not exactly right in the information they provide us, because we've automated the way for them to do so without having to recourse to a fax. So it's, process was easy, measurement not always possible depending on where you go, but, we had a reasonably easy time deciding what to do and, how to measure it when it was measurable.
Great. So I encourage you all to send in some questions. Some questions are slowly coming in, but I encourage you all to think of some questions for our guests or for Thea as well about the research report itself. I will keep asking questions in the meantime. Happy to maintain control of the floor. Another question for each of you, for Lisa and for Patrice. Each of you have described several specific initiatives to focus on, and you made these commitments, you set these goals back in 2012. Tell us, has there been anything in particular that's proved to be more challenging than you expected? And I'd be curious to hear, a little bit about why. What were some of the challenges you encountered? And then on the flip side, is there anything that's been easier than expected or something that surprised you? And let's start this time with Patrice.
Yeah, so one thing that has been more difficult than expected has been a commitment that we've made to try to improve the education about the product and the guidance, and in particular trying to improve on our FAQ. Frequently asked questions, pretty much nobody reads them. So counting on people reading frequently asked questions to solve problems that they may have doesn't really work, and we had considered that we would be producing a number of how-to videos, and we would create also an interactive contextual help system in the user interface so that people would be able to click on specific issues as they appear in their online statement rather than having to refer to the FAQs. And we still haven't deployed any of these things because we've underestimated the amount of work that has to be done for producing the content. Producing content for helping people with the product, producing videos, producing smart interactive help is actually an enormous amount of work. And maybe, because of our size, we've not been able to do this as quickly as we thought, but it was certainly, a challenge, and we're still not there yet. And this is something that we said we would do, but we haven't been able to deploy. Conversely, what we did for improving inclusion worked very well, as I said a minute ago, and so some of the stuff was immediate with an immediate positive effect. The fact that we moved our live agent support from offshore to onshore, just getting rid of the accents, had a tremendous impact immediately as well. We had a lot less negative feedback on our Facebook page. Where people would typically post negative comments about, how the customer support people were not helpful. And that has diminished quite dramatically easily, and that was an easy thing to do for us. But content-based self-help and replacement of the FAQ and how-to videos, that has been difficult.
And Lisa, what about you for NetSpend? What has been either more challenging or easier than expected?
Well, what was more challenging was, in any high growth business, there's a lot of competition for software development time, and so there were some things that didn't happen on the timeline that we'd outlined in the commitment. So similar to Patrice, things took a little bit longer than I had anticipated for some of the key initiatives, like expanding our Payback rewards program or getting our mobile refill in place. And so the good thing was that we did use that opportunity on some of our new partnerships to incorporate the Compass commitment from the very start. So where we for instance, last year we launched with a very large partner that took precedent over some of the initiatives. We were able to add incentives, these mutually beneficial incentives, into that program and saw great success from it. So the thing that was easier than anticipated were some of the things that we did with the call center, and so also sort of similar to Patrice, where we drove some of these conversations around benefit and really promoting the features that are beneficial for cardholders. That was extremely successful in driving customer satisfaction and driving great quality scores and really in driving adoption. So just that personal touch, which wasn't the thing that we had specifically focused the most on in the commitment, turned out to be more successful than some of the things that we thought would be. And that's part of the reason you do something like this is you give yourself the opportunity to try some things that you wouldn't normally, and you learn a lot about what resonates with consumers, which is really the important part, right? So it's not about what we think is the best thing, but it's about the things that the customer really engages in. And so we learned a lot about that.
And just, I think you both teed up the next question that I had planned to ask you. And I want to get this in before I turn to the questions from the audience. There are a couple of really interesting questions that have come in. But before I turn to that, I want to just follow up because I think both of your comments just now allude to this a little bit, and I just want to probe a bit deeper, and that is around the benefits to business. At the heart of the Compass principles is the idea that the practices we've been talking about are obviously good for consumers, but also benefit the business in the long run because they generate more loyal, engaged, and ultimately profitable customers. So is there anything else that you can say about impacts that you've seen on your bottom line as a result of these efforts? And Lisa, why don't we start with you to follow on your recent comments?
Great. So as the Vice President for Customer Experience, this first one was probably the most exciting one, and that is that we saw an 18% increase in customer satisfaction among cardholders participating in these engaged in our efforts. For the business, we saw an increase in the likelihood of customers to refer, and for us, referral is huge. We know that word of mouth is a key reason why many of our customers obtain our products. So by seeing referral rates increase, that's just a great sign for our business. And the one that's probably the most core for us is that we saw a 22% year-over-year increase in direct deposit accounts, and so that is really huge for us and a huge benefit for our business. It's also a huge benefit for our cardholders because of the money that they're saving on check cashing fees, the money the time that they are not expending depositing checks, and really ultimately the way that we measured ourselves was really $6 million of redeemable value back to our cardholders, and we think that was a huge success. But we love the satisfaction increases, the increases in referral rates, and the increase in direct deposit that benefited NetSpend for.
That's great. Those are some pretty impressive outcomes. And what about you, Patrice? What benefits have you seen to your bottom line? Or benefits, impacts of any sort of impact to your bottom line, positive or negative?
Yeah, I think we're not as sophisticated as NetSpend in measuring individual factors for our bottom line. But and when we started, we already had a fairly high level of, for example, direct deposits in our system. About 80% of the dollars that get injected in our accounts are from direct deposit, and this is about 50% of our users. And that hasn't really changed dramatically. One of the bottom line impact that we did, measure rapidly was the number of minutes spent by customers on the phone trying to resolve issues. Even though we end up paying more money for supporting people out of a location in the U.S. rather than offshore, the quality that we've gained in that customer support means that people are spending less minutes. And as is usual in our industry, you pay customer support per minute, and the less amount of minutes, the better off you are. So we've seen a decrease in the number of minutes that are spent by our customers on the phone trying to resolve things as a main factor. The other one being, for the same amount of money, as I said earlier, marketing-wise, we've been able to accept about 20% more customers by not asking them to fax or scan, pictures of government-issued IDs and doing this automatically.
Great. So I have here a question that's come in from our listeners, and this question is actually for you, Patrice. Can you elaborate a bit more on the improvements that you've made for the customer identification process for customers that don't have a Social Security number?
So for the time being, we've implemented one step, which is to use out-of-wallet questions, which are, knowledge-based algorithms, where you ask questions to people like, can you recognize this address among 5 possible addresses that you may have lived at 5 years ago, or what was the brand of your car 10 years ago, etc., which are disambiguating situations where we find someone who has an SSN that doesn't seem to match, but everything else does. We haven't deployed yet the full automation when people have no SSN at all, and you have to have the recourse to a government picture ID. We are going to deploy this in the next few months because it really takes an access to a webcam or a camera on a cell phone to take a picture of that government-issued ID and send it over to us for recognition. So that's still work in progress. But just the ability to ask these, what we call out-of-wallet questions, to disambiguate the cases where something is not quite right in what people have provided us, an address mismatch, or the name collides with another name, or one digit is wrong in the social security number. That is what we've deployed so far.
Thanks, Patrice. Another question that's come in, we've talked about a lot of things, and I'm thinking in particular back to Thea's presentation of the stretch and the next generation practices that can actively improve consumers' lives. And CFSI's point of view is that that's where we would like to see more innovation, and where I think there's more room for standing out amongst your competitors. One of our listeners is asking, which features do you find are most beneficial to the consumer? And I'll just add, maybe don't even limit yourself to what you might currently offer, but I'd love to hear your opinions. What features do you find to be the most valuable for customers on prepaid cards?
I guess I'll start. I'll answer this as both an executive and a NetSpend cardholder. And that is, I really find the thing that resonates really, really well with the consumer and with me is our Payback rewards program. So our merchant-funded rewards that puts money back in cardholders' accounts each month for shopping at select merchants. And we communicate those offers to the cardholder. They're customized for the cardholder based on their usage patterns, and they really can deliver quite a bit of monetary value back to a cardholder. So that's one thing that really resonates with our base. It really drives satisfaction up, as well as a user of the product. I find it's easy to use, it's great, and I personally love getting money back at the end of each month.
Thanks, Lisa. And Patrice?
Yeah, in our case, I guess I would stress two things. One is the ability to set money aside. We have the notion of a savings sub-account, and people are not saving much money. Actually, they're not really saving at all. If you look at the overall saving rate over the course of a period of 1 year, but they use this capability of setting money aside and so stashing it in a corner of the card and not being able to spend it until they repatriate it back into the main balance of the card. They use it as a way to regulate that cash flow. And we've had a number of customers say, hey, even though I'm not really saving any money because I circulate money in and out of that savings capability every month, but I self-regulate my cash flow, and this is used almost like a flying wheel, a financial flying wheel. And I go less often to the payday lender, and I have to ask money from my family a bit less often because I've had the discipline of setting money aside because the tool is there to allow me to do this automatically. And this was a little bit surprising to us because we really thought initially that people would be using saving as a savings account, but in the kind of demographics that we're serving, they're not. They're using it as a cash flow regulation tool. The other one, which was deployed post the participation to the Advisory Council and the publication of Compass Principles, which we think is a really big one, is the ability for people to deposit checks directly into their card by taking a picture of the front and the back of the check with their smartphones. And because that avoids a trip to the check casher. And it would not be needed if everybody had the luxury of obtaining direct deposit of their salary from their employers, but the reality is that a large number of people who work for small and medium-sized enterprises don't have that choice. Their employers just give them a paper check and that's it. And it used to be extremely complicated to deposit a check in a card. You would have to go to a check casher, get the cash, and then possibly use a cash load network to transfer the cash back into the card. Now the technology is there where you can just take a picture of the front and back of the check and the money can be in the card either instantly or delayed depending on your willingness to pay some fees for speed. And that we think is a major convenience that has been added recently and is paramount for many cardholders.
Well, thank you, Patrice and Lisa, for sharing your insights with us, and to all of you for your questions. I apologize that we haven't had time to get to all of them, but we are closing on the end of our hour. We want to close today's webinar with a call to action. First of all, tell us how you're using the Compass principles in your product innovation, and let us tell your story. As you can see, we have a growing number of self-service tools available on our website to help companies put these ideas into practice. These include the Compass Guide to Prepaid, as you've heard a lot about today, the Prepaid Industry Scorecard that Thea walked us through just a minute ago, and the Compass Advisory Note. The Compass Advisory Note that we released yesterday to coincide with this webinar has more detail about some of the things that Patrice and Lisa just shared because it highlights the work of NetSpend and of Banking Up. So I encourage you to go right after this webinar to our website to check that out. We are continually adding to this toolkit. I want to give you a heads up that in a couple of weeks we'll be releasing a second Compass Advisory Note that will focus on using the Compass principles as a tool for managing third-party risk. It profiles the efforts of prepaid issuing banks, MetaBank and Sunrise banks, both of whom incorporated the Compass Guide to Prepaid into their own due diligence process for selecting program partners. So stay tuned for that. And we encourage you to consider making an internal commitment to use the Compass principles to improve your product in the way that NetSpend and Banking Up have done, and to share the results with us. We may, in fact, use your company as a case study in a future advisory note in a future webinar. And for those companies that want to go beyond self-service, CFSI has a consulting practice that assists companies in all stages of product design and execution using the Compass Principles framework as a foundation for every engagement. Our team of consultants would be happy to have a conversation with you to talk about how we might help. And you can reach us at this email address. And lastly, I would be remiss if I didn't close by encouraging you to join us for the party in LA in June. Many of you are probably aware of CFSI's annual forum, formerly called the Underbanked Financial Services Forum. This is the same great conference, just with a new name. We'll focus on the latest trends in developing this marketplace. We'll continue our tradition of gathering all of the leading players in the industry, and we'll gain insights into the needs of the financially underserved and explore how to serve this segment profitably and for growth. I want to make sure to point out the next early bird deadline, which is April 18th, and encourage you to use our discount code FF14, which is for our friends and family. You can get $225 off the current rate. So with that, I conclude today's webinar. I want to especially thank Lisa and Patrice for joining us. Thank you all for spending the time. We will be sending out an email tomorrow with links to all of these publications and a feedback survey, and we encourage you to please share with us your feedback. Thank you all for your time.
Thank you.
Thank you.